Imagine waking up one day to find out that your government has been secretly buying Bitcoin. Sounds like a conspiracy, right? Well, it might not be. Countries around the world are quietly making moves that could change the financial system forever. With rising inflation, skyrocketing debt, and increasing distrust in traditional banking, Bitcoin is emerging as a potential reserve asset for entire nations. But the big question is, why now? And who's already making their move? Governments have long relied on gold as a strategic asset, but Bitcoin is quickly proving itself as the new digital gold. Unlike fiat currency, which can be printed endlessly, Bitcoin has a fixed supply, making it immune to inflation. But could governments already be secretly accumulating Bitcoin without telling the public? Welcome to the Chainpoint channel. Stay tuned, because in this video we're diving deep into how and why governments are positioning themselves for a Bitcoin future. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not investment advice. Always invest wisely. Let's get started. Governments around the world are starting to take Bitcoin seriously, not just as an asset, but as a potential strategic reserve. In a stunning move, President Trump has directed the US government to explore the feasibility of a national digital asset reserve. This marks a significant shift in policy, signaling that Bitcoin is no longer just a speculative instrument, but a potential tool for financial sovereignty. Other countries are also joining the discussion, raising questions about the geopolitical implications of a Bitcoin reserve race. The appeal of Bitcoin as a reserve asset lies in its unique characteristics. Unlike fiat currencies, which can be printed indefinitely, Bitcoin is capped at 21 million coins, making it inherently scarce. This scarcity, combined with its decentralized nature, makes it resistant to government manipulation, an attractive trait for nations concerned with financial independence. As BlackRock has pointed out, Bitcoin's lack of traditional counterparty risk makes it a powerful diversifier, particularly in times of economic uncertainty. Nations worldwide are increasingly viewing Bitcoin as a hedge against economic instability. Countries facing rising debt and inflation see Bitcoin as a way to protect their wealth against the devaluation of their national currencies. El Salvador, for example, has already made Bitcoin legal tender, betting that its limited supply and growing adoption will lead to long-term gains. If major economies follow suit, we could witness an unprecedented shift in the global financial landscape. With governments now exploring Bitcoin reserves, the question becomes, who will move first? Will the US lead the charge with its digital asset initiative, or will emerging economies take advantage of the first mover opportunity? Bitcoin has often been called digital gold, and for good reason. Like gold, it is scarce, durable, and widely recognized as a store of value. However, Bitcoin has a key advantage over gold. It is far easier to acquire, store, and transport. A nation can secure billions in Bitcoin with a simple hardware wallet, whereas storing and moving physical gold is an expensive logistical challenge. This efficiency makes Bitcoin an increasingly attractive option for governments seeking a modern reserve asset. Beyond logistics, Bitcoin offers a unique hedge against financial instability. Unlike traditional assets, it is decentralized and free from the control of any single government or institution. This means that while fiat currencies can be devalued by inflationary policies, Bitcoin remains unaffected by such interventions. BlackRock has even identified Bitcoin as a strong portfolio diversifier due to its lack of counterparty risk, making it a compelling choice for nations aiming to secure their reserves. Another reason governments are considering Bitcoin is its liquidity and accessibility. Unlike gold, which requires specialized infrastructure to trade, Bitcoin can be moved instantly across borders. In times of crisis, governments holding Bitcoin can quickly access liquidity without relying on the traditional financial system. This is particularly appealing for nations facing economic sanctions or geopolitical instability, as Bitcoin provides an alternative means of conducting international transactions. The global economy is facing an unprecedented sovereign debt crisis, and Bitcoin is emerging as a hedge against this growing instability. The US national debt has surpassed $36.4 trillion, with over $1 trillion spent on interest payments in 2024 alone. This alarming trend means that the cost of servicing debt is outpacing essential government functions, including defense spending. As fiat currencies continue to lose value due to excessive money printing, Bitcoin's fixed supply becomes even more appealing as a store of value. History has shown that Bitcoin thrives during periods of monetary expansion. Between March 2020 and March 2021, the global money supply increased by $14 trillion, fueling Bitcoin's rise from $5,000 to $61,000. This correlation suggests that as central banks inject more liquidity into the financial system, Bitcoin benefits from the loss of confidence in traditional currencies. In this environment, governments may begin to see Bitcoin not just as an alternative asset, but as a necessary safeguard against inflation. The sovereign debt crisis is also forcing countries to reconsider their monetary policies. With rising inflation eroding the purchasing power of national currencies, Bitcoin's deflationary nature offers a compelling alternative. Unlike fiat money, which can be printed at will, Bitcoin's issuance is predictable and finite. After the 2024 halving, its stock-to-flow ratio surpassed gold's, reinforcing its reputation as digital gold. As a result, governments that accumulate Bitcoin now may gain a strategic advantage over those that wait. If inflation continues unchecked and debt spirals further out of control, the adoption of Bitcoin reserves by nation-states may no longer be a theoretical discussion. It could become an economic necessity. The first nations to embrace Bitcoin as part of their financial strategy are already seeing results. El Salvador made headlines by making Bitcoin legal tender in 2021, a move that was initially met with skepticism. However, the country has since profited significantly from its Bitcoin holdings, using gains to fund public infrastructure projects. Bhutan, a lesser-known player in the crypto space, has also quietly accumulated Bitcoin, leveraging its hydroelectric power for Bitcoin mining, turning energy surplus into financial reserves. If major economies begin accumulating Bitcoin, we could see an international race to secure BTC before supply constraints make it even more expensive. The strategic implications are massive. Early adopters will gain a significant advantage, while latecomers may find themselves paying a premium for Bitcoin reserves. Smaller economies that embrace Bitcoin first could find themselves in an unexpectedly powerful position. Bitcoin's decentralized nature means that even nations with weaker fiat currencies can gain a foothold in the global financial system by accumulating BTC. This shift has the potential to level the playing field, giving emerging markets a new tool to counteract traditional financial constraints imposed by global institutions. As more countries begin considering Bitcoin as a reserve asset, the landscape of global finance is set to change dramatically. As Bitcoin's role in global finance grows, several nations are beginning to explore the idea of holding BTC as part of their national reserves. While some governments openly discuss this possibility, others may already be accumulating Bitcoin behind closed doors. The motivations vary from hedging against inflation to reducing reliance on the US dollar. The trend is clear. Bitcoin is entering the conversation at the highest levels of economic policy. In the United States, Bitcoin is becoming a key political issue. Wyoming Senator Cynthia Lummis has proposed the Bitcoin Reserve Act, which aims to integrate BTC into the country's financial strategy. Meanwhile, former President Trump's executive order directs government agencies to investigate the feasibility of a national digital asset reserve. Adding to the intrigue, figures like Robert F. Kennedy Jr. have suggested that the U.S. should accumulate up to 4 million BTC, a move that would radically alter the global Bitcoin supply dynamics. China's official stance on Bitcoin remains restrictive, but there are signals that its approach could be evolving. While Beijing continues to ban retail Bitcoin trading, Hong Kong has emerged as a crypto-friendly financial hub, attracting institutional investors and fostering digital asset innovation. Some analysts speculate that China is using Hong Kong as a testing ground, potentially laying the foundation for future state-level Bitcoin adoption. Given China's long-term strategic thinking, it wouldn't be surprising if Bitcoin quietly plays a role in its broader economic plans. Russia has already embraced Bitcoin for international trade, particularly as a means to bypass Western financial sanctions. Russian lawmakers have proposed creating a strategic Bitcoin reserve, recognizing BTC's ability to function outside the control of traditional banking systems. However, Russia remains hesitant to officially declare Bitcoin as a reserve asset, likely to avoid geopolitical tensions or triggering a response from major global institutions like the IMF. In South America, Brazil is taking one of the most aggressive stances on Bitcoin. A proposed law suggests allocating 5% of Brazil's national reserves to BTC, which would amount to roughly 186,000 BTC at current prices. If passed, this move could position Brazil as a leader in Bitcoin adoption among major economies. Other Latin American nations, inspired by El Salvador's experiment, may soon follow suit. Germany and Poland have both engaged in discussions about Bitcoin reserves, though neither has taken definitive steps toward accumulation. Interestingly, Germany has previously held and sold large amounts of Bitcoin, including a controversial sale of 50,000 BTC at $53,000 per coin. Had they held onto that reserve, it could have resulted in multi-billion-dollar gains. Poland, meanwhile, has a history of accumulating gold to bolster its financial independence. If Bitcoin is truly digital gold, it could become part of the country's long-term reserve strategy. Japan, one of the world's most tech-forward economies, has largely dismissed Bitcoin reserves for now. However, discussions in political circles indicate a growing awareness of BTC's potential. In a humorous twist, one of the politicians who brought up the idea was named Satoshi, ironically sharing a name with Bitcoin's mysterious creator, Satoshi Nakamoto. While Japan remains skeptical, the increasing global interest in Bitcoin reserves may eventually force the country to reconsider its position. If you want a deeper dive into Japan's evolving stance on crypto, check out our video, Japan's Crypto Comeback, Will It Ignite the Next Bull Run?, where we break down how Japan's policies could shape the next phase of Bitcoin adoption. If governments publicly announce their Bitcoin accumulation, prices would likely skyrocket overnight. That's why many believe nations may already be secretly acquiring BTC to avoid triggering a buying frenzy. The game theory at play is simple. The first movers gain the biggest advantage, while latecomers may have to buy Bitcoin at significantly higher prices. In a world where financial dominance is key, no country wants to be the last to act. A prime example of strategic accumulation is how corporations like MicroStrategy and Tesla acquired Bitcoin. Instead of making their purchases public immediately, they accumulated large positions discreetly before announcing their holdings. Governments could be following a similar strategy, silently stacking Bitcoin before making official policy shifts. The secrecy ensures that they secure BTC at lower prices before public confidence pushes valuations higher. Another layer of this game theory is the competitive nature of global finance. If one major nation openly declares Bitcoin as part of its reserves, others will likely rush to follow suit to avoid being left behind. This could trigger a domino effect where a single announcement sets off a chain reaction of Bitcoin accumulation worldwide. The 9x market cap gap between Bitcoin and gold suggests there is still substantial room for BTC to grow if governments begin treating it as a true reserve asset. The big question remains, will Bitcoin reserves become the new gold standard for governments, or is this just another speculative trend? As nation-states continue to explore digital assets, the long-term impact of Bitcoin in global finance is still uncertain. Some policymakers argue that Bitcoin's volatility makes it too risky to be a reliable reserve, while others believe its scarcity and decentralization make it the perfect hedge against fiat instability. The truth likely lies somewhere in between. History suggests that Bitcoin thrives in times of economic turmoil. With increasing inflation, record-high sovereign debt, and growing distrust in central banks, Bitcoin's appeal as a non-sovereign asset is stronger than ever. Countries that fail to recognize its potential may find themselves at a disadvantage if Bitcoin's adoption accelerates. The fact that the US has spent over $1 trillion on interest payments in 2024 alone signals just how fragile the current financial system is. If debt and inflation continue to spiral, Bitcoin could become less of an alternative and more of a necessity. However, a bear market could slow down Bitcoin's adoption by governments. If BTC experiences another major correction, policymakers may hesitate to allocate national reserves into such a volatile asset. The key question is whether short-term price fluctuations will deter countries from making long-term strategic investments. Those who understand Bitcoin's stock-to-flow model and its deflationary nature may see downturns as buying opportunities rather than warning signs. As we stand on the edge of this financial shift, one thing is clear: the conversation around Bitcoin as a reserve asset is no longer theoretical. Governments are watching, some are acting, and sooner or later, major players will have to make their move. The only question is, will they embrace Bitcoin before it's too late? So here's the big question. Will governments fully embrace Bitcoin as a strategic reserve asset, or will they hesitate and miss out on one of the biggest financial shifts in history? As we've seen, the signs are already here. From the US exploring a national Bitcoin reserve to Brazil proposing a 5% allocation, the momentum is building. If even one major nation openly accumulates BTC, we could see a domino effect that pushes Bitcoin into the heart of global finance. But what do you think? Are governments already stacking Bitcoin in secret, or is this all just speculation? Drop a comment below and let's discuss. And if you found this video insightful, smash that like button and subscribe for more deep dives into the future of finance. Make sure to stay ahead of the curve by turning on notifications so you don't miss the next update. Thanks for watching, and I'll see you in the next video.